Vice Chairman of Jalgaon branch, along with his entire managing committee. Our today's eminent speaker, C. Raviji Gupta sir from Mumbai, C. Pawanji Jaju sir, the Vice Chairman of Amravati branch, galaxy of all past chairmen from both the branches, senior members, and my colleague friends. You all are welcome on this virtual platform. Before starting this webinar, I would like to remind you all that tomorrow our nation will be celebrating 73rd Republic Day. For that, I would like to say few words on it. ना पूछो हमारे जमाने को, ना पूछो जमाने को क्या हमारी कहानी है, हमारी पहचान तो सिर्फ ये है, हमारी पहचान तो सिर्फ ये है कि हम सिर्फ एक हिंदुस्तानी है. So now with these words, so we are now moving ahead. Now I would request our Amravati's branch evergreen smiling and dynamic chairperson CA Sunilji Salampuria sir to kindly give his opening remarks on our today's webinar. Now over to CA Sunilji Salampuria sir.
Thank you, Saket bhai. Am I audible?
Yes sir, you may please continue.
Okay. A very good afternoon to one and all present over here. It is my pleasure to welcome all of you today on this virtual webinar of formation and taxation of charitable trust with recent amendment, which is hosted jointly by Amravati and Jalgaon branch of WRC of ICAI. First of all, I would like to welcome and acknowledge the presence of our today's session chairman, CA Shweta Jain ma'am. She is recently elected member of the WRC of ICAI. Also, she is the past chairman of Vasai branch. And also, I recognize the presence of our today's eminent speaker, Raviji Gupta sir from Bayandar. And I also welcome our co-partner, Vice Chairman Vicky Birla sir, and our branch chairman Pawan Jaju sir, and all members present over here, and senior members, and my dear friends. You all are welcome on this virtual platform. Before starting this seminar, as Saket bhai told that yesterday, tomorrow is the Republic Day, 73 Republic Day. That is the Amrut Mahotsav. We are celebrating this year the Amrut Mahotsav, as our Pradhan Mantri has told that the Amrut Mahotsav is going on. So I also say few words on this. हर भारतीय की तमन्ना उत्सव है, हर भारतीय की मन में उत्सव है, क्योंकि आजादी का अमृत महोत्सव है. अमृत महोत्सव से ली अंगड़ाई, ये तो आजादी की बहुत बहुत बधाई है. सभी को आजादी की बहुत बहुत बधाई है. और dear members, few months ago we have saw our ICAI election 2021 2022, where we have an interactive also. Now we are again for improving our knowledge on this hot topic of trust and formation and recent amendments. So this is the glory of our profession, that every event after the immediate election of WRC and CCM, we are back again to update our knowledge and sharing the knowledge on this virtual platform. Today we are gathered in order to understand the formation and taxation of trust, charitable trust with recent amendment. I think this is the hot burning issue, as the entire process of the trust registration, re-registration, approval and reapproval for section 80G, 12A is completely online process. This is excellent initiative taken by the CBDT in order to bring transparency, paperless and working environment, speediness in the trust related issues. So I would also request our speaker, sir, to kindly acknowledge, enlighten on many issues in section 115 TD regarding the accelerated income of the trust and its taxation on the maximum marginal rate. So in the last, I would also add that it will be the golden opportunity for our young members to kindly take benefit from this webinar, as they are going to play the crucial role in this transmission phase of the trust related issues, and finally it will also help to expand their practices. With these words, I would once again thanks to all members for giving their patience time and listening in order to attend this webinar. Thank you, and take care of your health. Over to MOC. Thank you.
Thank you very much, Chairman sir, for giving your welcome remarks. Moving further, it's our privilege to have with us today CA Shweta Jain ma'am as the session chairperson. I feel honored to inform you all that CA Shweta Jain ma'am has contested for WRC election 2021, and ma'am has been elected as the regional council member for the year 2022 to 2025. So heartiest congratulations to ma'am and best wishes from all our side on behalf of Amravati branch and Jalgaon branch. So I would also like to give brief introduction about CA Shweta Jain ma'am. She has been the founder of CA Shweta Jain and Company in January 2006 as a partnership firm, and she is a senior partner in this firm. She is a fellow member of ICI, having a professional experience of over 15 years. She is a techno-service chartered accountant with a diverse background with exposure to accounts, audit, budgeting, MIS, secretarial work, RBI, taxation, TDS, payroll, and excise. She has led from the front, playing a key role in the strategic growth of the organization. As well, her management responsibility, she continues to take personal responsibility for a number of firms' long-standing clients. She has also been considerable interest in the development of new entrepreneurship business. She has been also the past chairman of Vasai branch of WRC of ICI. So with this introduction, I would now request our today's session chairperson to kindly give the opening remarks on this webinar. Now over to CA Shweta Jain ma'am.
Thank you so much, Saket ji, for the kind words and beautiful
Thank you,
start.
it's my privilege.
And beautiful start with the quotes of Azadi Ka Mahotsav and the Shairi. Really beautiful.
Thank you very much, ma'am.
So, Chairman Amravati branch Sunil ji Salampuria, Chairman Jalgaon branch Prashant ji Agrawal, Vice Chairman Jalgaon branch Vicky Birla, Vice Chairman Amravati branch Pawan Jaju ji, and eminent speaker of today's session Ravi Gupta ji, and colleague from my own branch. All the dignitaries who have joined today, all the managing committee members of both the branches, and all the participants. Very good evening to all of you. This is really my pleasure, and rather I should say it's my privilege to be invited by both the branches. Thank you so much, Sunil ji, Prashant ji, for inviting me here today. I was listening that both the branches has done excellent job despite of COVID situations. And I really appreciate the tremendous work done by both the branches, and would like to congratulate to both the chairman and his team for the remarkable performances. Special congratulations to Amravati branch for inaugurating a CA Bhavan Marg. I was hearing even from the president's mouth that it's really a very good initiative, and you have done an excellent, because it's really a proud feeling even for all chartered accountants, because it creates a brand image of chartered accountants in a public domain. So definitely, भले वो एक छोटा सा एक circle पे हमारा board लग रहा है, but people will start calling that the road is CA Bhavan Road, CA Bhavan Mark something. So they will start recognizing the chartered accountants. So definitely, it's really important in building an image of overall chartered accountants. So congratulations to you and your team. Also, you have run the show even in lockdown, whether it is vaccination drive or RT-PCR camp. So really kudos to you and your team that you have done excellent work. And I'm sure you will keep continuing the same work in future also, because the team is really vibrant. So I'm sure it will happen in future also. So coming to the representative at WIRC, since I'm newly elected and will take charge after 25th Feb, or maybe from 25th Feb 2022. So what I can say is I'm always available for any kind of help, guidance, whatever you feel. Please feel free to call me at any point of time. I'm just a call away. And if call is not connected, please do SMS, and definitely I'll reply on that. Whatever is possible, whatever is not possible, what is your suggestions? The more important here is, see, पूरी fraternity को अगर हमको serve करना है, तो it's not a one person job. All have to come together collectively. Each and everyone has to play a role. कोई मैनेजिंग कमेटी में रहकर रोल प्ले कर रहा है, तो कोई रीजन में, कोई कहाँ ब्रांचेस में. सो आपके जो भी सजेशंस है, इट्स रियली वैल्यूएबल टू अस. प्लीज डू राइट अस. क्या हो सकता है, आपके क्या सजेशंस है, क्या लोकल लेवल पे आप लोग फेस करते हैं. डेफिनेटली वी विल ट्राई टू रिजॉल्व इट वेरी सून. सो coming to today's topic, it's really very relevant and need of the hour, as rightly started by Sunil ji. So, and with the excellent speaker like Ravi Gupta ji, I am sure you all will be benefited from his knowledge. So I don't want to come in between you and speaker because he's a speaker and he's waiting कि मेरा फटाफट ये खत्म करे, inaugural तो हम शुरू करें. So I will limit myself here. So once again, thank you so much, and happy Republic Day in advance. Thank you so much.
Thank you very much,
Thank you, ma'am,
for your
kind words, ma'am. Thank you very much, ma'am.
Thank you very much, ma'am, for your opening remarks and also for sharing your view. And I would also assure you, ma'am, that both of our branches, that is Amravati and Jalgaon branch, will definitely work shoulder to shoulder with you for the upliftment of our institute and as well as our profession. And we all are sure that you will definitely get the desired post at WRC according to your capability. So thank you once again, ma'am, for sparing your precious time with us. Now moving further, we now have with us today a very learned speaker, CA Raviji Gupta sir from Bhayandar, Mumbai. We welcome you, sir, on this virtual platform on behalf of both the branches. Before giving charge over to speaker, sir, I would request CA Bhagyashri Sonkusre to kindly give brief introduction about our speaker, sir. Now over to CA Bhagyashri. Kindly unmute yourself, Bhagyashri.
Thank you, sir. Am I audible?
Yes, you are audible. Please continue.
Okay, thank you. I would like to introduce CA Ravi B. Gupta, sir. CA Ravi B. Gupta, founder partner of Ravi B. Gupta and Company, having more than 25 years of experience in the profession. He renders professional services in the areas of formation and taxation of charitable trusts, societies, Section 8 companies, audit and assurance, direct and indirect taxation, financial planning and tax planning. He has cleared limited insolvency examination in October 2017 and has till date offered support services in insolvency resolution cases. He was a member of the Cooperative Society Committee of WIRC of ICI for the year 2021. He speaks on the following: formation and taxation of charitable trusts, Foreign Contribution Regulation Act, corporate social responsibility, in the event organized by the ICAI through its region, branches, study circles, and other forums. He has addressed and interacted with the senior officers of CAG on audit and taxation of charitable trusts, institutions, NGOs. He has addressed office bearers of leading educational institutes and medical institutes with regards to the formation of taxation of charitable trust institution, along with the recent amendments in the Maharashtra Public Trust Act and Income Tax Act. He has contributed to the WIRC reference manual on the subject of taxation and charitable trust, Institution, and Maharashtra Public Trust Act 1950. He has also contributed for representation to be made to the Ministry of Law through the Charity Commissioner on amendments to the Maharashtra Public Trust Act and other related issues. His articles are also published in the newsletter published by the Vasai branch of WRC of ICA. Thank you. Over to Saket, sir.
Thank you very much, CA Bhagyashri Sonkusre, for giving the brief introduction. It's now time to lend our ears for the presentation of our speaker, sir. So, without wasting much of your time, I would request CA Raviji Gupta, sir, to kindly take the charge over this session and guide us on our today's topic. Now, over to CA Raviji Gupta, sir.
Okay. Am I audible?
Yes, sir, you are audible.
And the screen is also visible, I believe.
Yes, sir. Yes, sir.
At the very outset, I would like to thank CA Shweta Jain, our very own RCM from the Vasai branch. And we have all seen her journey, her struggles, her hard work. And I take this opportunity to congratulate her once again for being successful. And I'm wishing her all the best so that she can serve the fraternity. And I know she will do that. She has been doing it over the years. And she will do it nicely henceforth. And we want to see her at the topmost position in ICA. Thank you. Thank you so much.
Thank you so much for all the wishes. Thank you so much.
And Shweta ji, thank you for being instrumental to this seminar. And it has been because of you that I have come into contact with Mr. Sunil Salampuria and the other office bearers now, Mr. Vicky Birla, Mr. Pawan Jaju. Prashant ji, of course, is not there with us. So I would like to thank all the office bearers of both the branches. Both the branches are so vibrant, I can understand from the conversation which we have just went through. So wish you all the very best, all the office bearers, wish you all the success. And with this, I will not take much time in formalities and I will start the session. The session, just to brief about the session, I would like to complete this particular talk in say 90-95 minutes. And in the next 20 to 25 minutes, we will have question answer sessions because I know that a lot of participants will be having a lot of questions. Of course, I do understand that 20-25 minutes time may not be sufficient also. But for that matter, I am always available. I have shared my PPTs and or if I think I have shared my PPTs. And if any other member, any other professional brother has got some queries, I'm always available. I can be contacted on my email. I can be contacted on my mobile phone. Anyhow, I will definitely reply to the queries. I can assure you that. So with this, not wasting much time, I will start the session with the formation of charitable trust first, and then we will talk about taxation. I will not talk much about formation because there is not much to talk about formation. And the important aspect is taxation of charitable trust, because there are a lot of amendments as far as taxation is concerned. So I will just touch upon formation and then we will take an elaborate session on the taxation part. Okay. So first and foremost, formation of charitable trust. Formation of charitable trust, I'm not going into much detail as I told you earlier. Why do we form a trust? I mean, everybody knows here. Let me make it very clear. Here we are talking about public charitable trusts. We are not talking about private trusts today. Public charitable trusts for charitable purpose. These are NGOs, institutions whose motive is not to make profit. So why do we form a trust? To meet our charitable goals, to meet our social goals. That is very clear. And how, as far as Maharashtra is concerned, everybody of us knows that in Maharashtra, we have a charity commissioner. In most of the states, we do not have a charity commissioner. But in Maharashtra, we do have a charity commissioner. And within the jurisdiction of the charity commissioner, we can do two types of registrations. One is registration under the Maharashtra Public Trust Act, and the other is registration under the Societies Registration Act. Maharashtra Public Trust Act is Maharashtra Public Trust Act 1950. Societies Registration Act is Societies Registration Act 1860. Societies Registration Act is a national act, and Maharashtra Public Trust Act, as the name suggests, is a state act. But of course, let me make it very clear. If you are forming a charitable trust under the Maharashtra Public Trust Act, that does not mean that you can do your activities only in Maharashtra. You can do your activities pan-India. So that let us, be very clear that if we are forming either of the two constitutions are okay for us to operate throughout India. And the third way in which we can form a charitable company, a charitable organization is a Section 8 company under the Companies Act 2013. Erstwhile, it was called Section 25 of the Companies Act 1956. Now it is Section 8 company under the Companies Act 2013. So these are the three ways in which we can form a trust. One thing I would like to thrust upon, that when you form a society under the Societies Registration Act 1860, for all other practical purposes, for example, rendering the accounts, for a change report, and for all other practical purposes, the Charity Commissioner will recognize a number allotted under the Maharashtra Public Trust Act 1950. So once you register your society under the Society Registration Act 1860, please take a certificate under the Maharashtra Public Trust Act 1950 also, which is given by default. You don't have to do much exercise for that. Of course, there is a backlog, say 1 month, 2 months, and you will get your second certificate without much delay. So once you get that certificate, and the number allotted on that certificate will be used for all practical purposes. For example, submission of accounts, submission of change report, and for any other formality. So this, I would like to make it very clear over here. Now, you know, lot of my clients, many of the clients you must be facing, they are pretty confused. कि भाई साहब कौन से constitution में जाए? Should we form a trust? Should we form a society? Should we form a Section 8 company? So, you know, this differentiation is very important. You know, Section 8 company, at times, you know, Section 8 company may, as you all know, that a lot of formalities are involved. The trust may be a small time trust. They may want to do very minor operations initially. They may grow bigger later on. So for such trust, I would recommend that you should start with trust, with a trust registered under Maharashtra Public Trust Act. And one more differentiation, if you have got say 2 members, 3 members, or 2 trustees, 3 trustees, 4 trustees, then you definitely have to form, you can either form a trust under the Maharashtra Public Trust Act or a Section 8 company. Because in both these constitutions, minimum of 2 people are required for formation. Whereas in a society, you need 7 members, minimum 7 members. So the point of differentiation is, if you have a group of people which are less than 7, then you have got only 2 options. And then if Section 8 is a bit expensive also, and the compliance is also on a higher side, so people may want to register the organization initially under the Maharashtra Public Trust Act. So in that case, you can eliminate Section 8 company also, and then you can zero down on formation under Maharashtra Public Trust Act also. If you have got 7 members, if the organization is a very diverse organization with a lot of people amongst the society, then in that case, I would recommend that you go for a society. And when you go for a society, as I told you earlier, you will get a certificate under Maharashtra Public Trust Act by default. So these are, you have to understand the actual need of the client. What is he looking for? Suppose it is a closely held trust, for example. Only a few of the family members are the trustees. In that case, I would definitely recommend that you go for Maharashtra Public Trust Act 1950. Maharashtra Public Trust Act 1950. Let us cover some important points. Earlier, it was called Bombay Public Trust Act 1950. Now the name has changed to Maharashtra Public Trust Act 1950. Charity Commissioner, of course, is the regulatory authority. And whatever is applicable in Maharashtra Public Trust Act, as I told you, it is applicable to Societies Registration Act also. Trust, of course, it is a legal entity. It is a separate individual body. It has to be considered as a separate legal entity. The subject matter of the trust is known as trust property, and the document in which all the terms and conditions regarding the trust are written is known as the trust deed. So this is very elementary. What here the charitable purpose is defined under the Maharashtra Public Trust Act also. Similarly, charitable purpose is defined under the Income Tax Act also. There is not much difference, but of course, there is a slight bit of a difference that we will see later on when we come to the income tax portion. Society is a group of persons who are associated together for a common purpose. We have already covered that. One very important difference in a society and a trust is, in a trust, there is always a settler. There will be one settler and there will be minimum 2 trustees. Settler may be a trustee also. Whereas in a society, there is no concept of settler. It is a group of minimum 7 people who are coming together to form the organization. Section 8 company, of course, it is Section 8 company. The certificate is issued by the Ministry of Corporate Affairs. I'm not going to the process of registering Section 8 company because all the members may be aware of forming a Section 8 company. Mostly, as far as I am also concerned, I have a company secretary on my panel and I get the Section 8 companies registered through a company secretary. So in any case, a chartered accountant can also go ahead and get the trust registered under Section 8 of the Companies Act 2013. For the better understanding of whatever I have just now covered, I have given a tabular presentation whereby I have made a comparison of forming a trust, society, or a Section 8 company. I would strongly recommend all the members to go through this tabular presentation for a clear-cut understanding of the difference in these 3 types of organizations. Now, I have given a brief sheet over here. Requirement for registration under Maharashtra Public Trust Act. What all is required for registering an organization under the Maharashtra Public Trust Act? For example, application in Schedule 2, court fee stamp, certified copy, consent letter of the trustees, address proof, very important. Address proof has to be provided. The address proof need not be the property of the office, need not be owned by the charitable trust. Any trustee's residence can be used, any trustee's office address can be used for all practical purposes as the administrative office of the charitable trust. The only thing is the NOC has to be issued by the owner of the property. Self-attested copies of ID and address proof of all the trustees, tabular details containing name, address, photograph, age of all trustees, affidavit and paper notice. Now, what is paper notice? When you form a charitable trust under Maharashtra Public Trust Act, a paper notice has to be published in a local newspaper for a period of 1 month to invite objections, if any. Generally, in my practice, I have seen that I have not yet received any objections against any of the advertisements or against any of the paper notices. You may call it is just a formality which has to be complied with. And that is the reason the formation of Maharashtra Public Trust Act, formation under Maharashtra Public Trust Act takes a longer time as compared to Societies Registration Act. Generally, when we are practicing in Thane Charity Commissioner, we are practicing in Palghar Charity Commissioner and Mumbai Charity Commissioner. Over here, the routine time is 1 month for Society Registration Act and 2 months time for Maharashtra Public Trust Act. Within this time slot, usually we are in a position to get the registration done. Now, the next sheet contains requirement for registration under Society Registration Act 1860. Again, letter requesting for registration, memorandum of association. Of course, the constitutional document, it is also covered in my tabular presentation. But let me tell you once again that for a trust to be registered under Maharashtra Public Trust Act, the constitutional document is a trust deed. Whereas for a trust or a charitable organization to be registered under Society Registration Act, we got to prepare memorandum of association and rules and regulations. That is a major difference between these 2 organizations, 2 types of organizations. Now, very important when you form a trust deed, when you come up with the documents, or when you prepare the constitutional document, at that time you have to be very careful that you got to make the document so that you don't face any hassle when you want to register your trust under Section 12A or if you want to take approval under Section 80G. So in our practical experience, what we have seen is generally the income tax department insists on 6 clauses. Those 6 clauses are mandatorily to be included in the constitutional document. I mentioned all those 6 clauses: irrevocability clause, beneficiary clause, dissolution clause, utilization clause, alteration clause, beneficiary clause, and amendment clause, amendment and alteration clause. These are the 6 clauses which are to be included in your constitutional document. Otherwise, the income tax department will object to your constitutional document. They may tell you that you get your document altered first, or you get your document rectified first, and then come to us for 12A registration or ATG. So please include all these 6 clauses so that you will not face any practical difficulties. There have been case laws whereby it has been decided that dissolution clause is not necessary, not mandatory, but then too, we are not in a position to contest. Suppose if the income tax department rejects your application, the application is rejected by the CIT, and the recourse which you have, the action which you can take is, you have to file an appeal to the Income Tax Appellate Tribunal. Now, dear friends, tell me, a small time trust with a non-profit making objective, are they in a position to bear the cost to file an appeal to the Income Tax Appellate Tribunal? Big time trust, they can do it, but it is not advisable. So the better way to do is, rather than not to contest, the important thing is you include all these 6 clauses so that there is no hassle as far as 12A registration is concerned. Now, after formation of your charitable trust, you have to submit, the accounts have to be submitted to the charity commissioner also. The process is definitely online, but now we have seen both the eras. When we used to submit the accounts offline, and now in the online era also, we are doing a lot of work. But the online thing has become more difficult nowadays, because you file the accounts online, you get an acknowledgement which is generated by the website of the charity commissioner's office, and then you have to get it signed by the trustees. If the accounts are audited, you have to get the signature of the auditor also, and then submit it again offline and take an order that the account has been submitted. So this has become more difficult as compared to what it was done earlier. A lot of members are not aware that a Schedule 1 is maintained at the Charity Commissioner's office. What is Schedule 1? Schedule 1 is the complete history of a charitable trust. So whenever a new client comes to you, and suppose if the client is old, I mean the trust is old, it is registered say 5 years, 10 years, 15 years back. In that case, I will definitely recommend that you first of all go and take the Schedule 1. Because once you take the Schedule 1, you will know what all formalities or what all compliances are pending at the end of the charitable trust. So that we can decide that first of all, let us complete all these compliances, because otherwise, if the compliances are incomplete, in the latest amendments, the charity commissioner has been given powers to deregister the trust. So that I have covered in the next slides, the power of deregistration given to the charity commissioner. So I would strongly recommend that please see that all the compliances at the charity commissioner's level are complete. One more thing, the income tax department has come up with Finance Bill 2020. In Finance Bill 2020 also, the department has given powers, the CBDT has given powers to the Commissioner of Income Tax to cancel or to reject the 12A registration of a particular trust if the trust is non-compliant under any other law. So suppose if there is any non-compliance as far as Maharashtra Public Trust Act is concerned, you may face a challenge as far as 12A registration is concerned, or if you are already registered under Section 12A, the 12A may be withdrawn. So please see to it that the compliance is done at both the ends. Similarly, the Maharashtra Public Trust Act or the Charity Commissioner is also vested with the powers to cancel the registration of the trust if there is non-compliance under any other law. So we have to be very careful. We have to do the compliances in time, on time, with both the authorities, with both the regulatory authorities. deregistration of trust. That is what I'm talking about. Suppose if there is a non-compliance to the extent of say 5 years, you have not submitted the accounts, you have not submitted the change reports, you have not replied to the notices of the charity commissioner. In that case, the charity commissioner has got power to deregister your trust. I've come across many trusts whose names have been struck off, and the process to restore the name of the trust is that you have to file an appeal to the charity commissioner stationed at Worli out here, and you have to appear before him, give a valid reason so that your name can be restored back into the charity commissioner's register. That's it. I mean, I think this is about formation, and there are many other things, of course, but I'm not touching upon all the issues. There are many issues like permission to be taken for investing the trust funds, change in the pattern of investing, to be precise, audit budgets to be filed with the charity commissioner's office. But those all things are not of much importance. That is why I'm not covering over here. If any of the members have got some specific queries about it, I will definitely answer those queries. So now I think we should come upon taxation of charitable trusts institutions with recent amendments. Now today, as far as taxation of charitable trusts with recent amendments is concerned, this will be my syllabus today. I will be covering section 215, section 10, 11, 12, 12A, 12AA, 12AB, section 13, and to be precise, 115 BBC, read with section 13.7, and section 8 IG, 115 TD2, TF, 164.2 and 164.3. So coming to section 215. One very humble request that I would like to make to all the members out here is each and every member, each and every participant, each and every professional brother should have a very tight grip on section 215. 215 is a very important section. I have seen that a lot of people, I mean, I would not say neglect, but they don't pay much attention to section 215. Because section 215 is the definition of charitable purpose. And it's a very vast section, and it is a very inclusive section. Charitable purpose includes, earlier there were only 4 items, then one more item was added, then 2 more items were added. Earlier there was relief of poor, education, medical relief, and advancement of any other object of general public utility. Then yoga was added, then I think preservation of environment was added, then preservation of monuments was added, and then yoga was added in the year 2015. So this is not an exhaustive list. This is a very inclusive list, and a lot of items can be included over the period with a change of time and as the need arises. So this is the definition, inclusive definition of charitable purpose. Then a very important pointers I have laid down as far as section 215 is concerned, based on the case laws which I have gone through. So very first point, the definition of charitable purpose is inclusive. As I told you, all the limbs of section 215 are not mutually exclusive. They may overlap. Now, what does this mean? Suppose if you are doing a particular activity, that activity may fall under relief of poor also, and that activity may fall under education also. For example, if you are sponsoring an education of a particular student, in that case, your charitable activity is related to education as well as relief of poor also. So that is what I mean by saying not mutually exclusive. They may overlap, So that is what it is. A purpose must, in order to be charitable, be directed to the benefit of the community or a section of the community as distinguished from an individual or a group of individuals. Now, this is the acid test. Suppose if you are doing certain activity, for that activity to be called a charitable activity, you have to always see that who are the beneficiaries. If the beneficiaries are a very restricted lot, in that case, it is not a charitable purpose. But if the beneficiaries are a section of a community, or if the beneficiaries are always a fluctuating body, in that case, it may be called as a charitable purpose. One more very important thing, that for an activity to be classified as charitable purpose, it is not necessary that it should benefit the whole of mankind. It may benefit a particular section of the society. It is fine. The other point is not necessary to provide free services. Many a times people come up to us, they tell us कि भाई सर हम स्कूल खोलना चाहते हैं, स्कूल खोलना चाहते हैं, लेकिन हम डोनेशन अगर नहीं आएगा तो हम बच्चों से फीस नहीं लेंगे तो हमारी स्कूल कैसे चलेगी. So in that case, let me be very clear with you that it is not necessary that you provide free services. Even if you are charging your customers or clients, and if you are earmarking certain funds for the benefit of the mankind or for serving the poor, that will also fall under charitable purpose. Then one more point, presence of an uncertain and fluctuating body of beneficiaries, that I have already discussed earlier. Now, in the year 2008, the proviso was added to section 250. Now, what does this proviso say? That if the trust is doing any commercial activity and the total receipt exceeds more than 20% of the gross receipts from that particular commercial activity, in that case, it will not be treated as a charitable trust and the benefits of section 11-12 will be denied. But of course, as per section 13.8, it is also very clear that that particular deduction under section 11 or 12, benefit under section 11 or 12 will be denied for only for that particular year in which the limit of 20% has crossed. Otherwise, your trust will be eligible for deduction under section 11 and 12. So this I'm reading this proviso along with section 13.8, which again I will cover later on when I'm coming to section 13. Now, the proviso is included, okay, but there are certain clarifications also. One of the most important clarifications which I could see is the intention is to, by introducing this proviso, the intention is to limit the benefit to the entities which are engaged in charitable activities and deny it to purely commercial and business activities which wear the mask of a charity. Prior to 2008, there were many instances whereby business entities were run in the mask of charity and the benefit of taxation was the benefits of taxation was availed by undeserving charitable trusts also. So that is why this proviso has been introduced. But of course, in my experience and in the case laws which I have gone through, each and every trust will be taken on a case-to-case basis. Not only the pure reading of the proviso will be applied. Okay. I have written a certain case laws also. For example, pharmacy in hospital is integral and not incidental business activity. So pharmacy in hospital will be included in charitable purpose again. Cancellation based on proviso to section 215 read with section 13.8 not justified. What does this mean? That your registration will not be cancelled just because you have crossed the limit of 20%. Of course, the deduction under section 11 and 12 will be denied for that particular year, but for the years when you are within the limit, you will not be you will be given the deduction under section 11 and 12. That is what it means. And one more very important point: the above restriction does not apply in respect of first 6 limbs. What are those first 6 limbs? Relief of poor, medical relief, yoga, then education, preservation of forest, and preservation of monuments. In these 6 cases, you may have business activities run parallelly to the charitable activities. Of course, those business activities will be governed by section 11.4 and section 11.4a. Now, let me come to section 10. Section 10 may the most important section which is relevant to charitable organizations is section 23C. And that too, I would touch upon 3AB, 3AC, 3AD, 3AE, and 6 and 6A. 1023C, 6 and 6A. 3AB and 3AC is for educational institutions and hospitals financed by the government, whereby the government stake is more than 50%. 3AD and 3AE for educational institutions and hospitals, which are crossing the limit of 1 crore. Now, the limit has been revised from 1 crore to 5 crore from assessment year 22-23 onwards. And people who may having older cases, whereby the limit of 1 crore is applicable. In that case, there have been case laws, dear members, whereby if you are running 2-3 different educational institutes, or if you are running 2-3 different medical institutes, in that case, each and every institute will be considered as a separate entity and the limit of 1 crore will be applicable. So just to plug the loophole, this amendment has come from assessment year 22-23, whereby the limit is enhanced to 5 crores and the 5 crore limit is a cumulative limit. It is not unit wise. It is a cumulative limit of 5 crores. Suppose if you are running 5 entities, 5 different institutes, in that case, the turnover of all those 5 institutes will be clubbed and then the threshold limit will be applied to it. In organizations which are not falling within the limit of 5 crores, which means that they are crossing the limit of 5 crores, subclauses 6 and 6A are applicable. You have to take permission of the Chief Commissioner or the Director General, to which is again a permission under section 1023C, 6 and 6A, so that you can avail the benefits of the particular section. The remaining things are 15% accumulation, etc., is the same, similar to 12A registration. So I'm not touching much upon that because I'll be covering section 12A. At that time, we will touch upon it. Audit has to be filed. I would like to bring to the notice of the members that in an organization registered under section 12A, audit in form 10B has to be filed. And in an organization registered under section 1023C, audit in form 10BB has to be filed. Now, coming to the need of the hour or the most important discussed subject, amendments by the Finance Act 2020 in a nutshell. Now, Finance Act 2020, I will not go into the section part. I will explain in brief what changes 2020 has made. 2020 has made a very elaborate change. Earlier, the registration under section 1023C and section 12A and section 80G, they were granted for perpetuity. But now, section Finance Act 2020 has made a very drastic change, whereby you will be given registration or approval for a period of 5 years to existing charitable trusts, and the trusts or institutions who are going first time to the income tax department for the necessary approvals and registration, they will be given a provisional registration for a period of 3 years. They have to start their activities, and if they are not in a position to start the activities for say 2.5 years, in that case, they have to again go for the regular registration after 2.5 years and then procure a registration, regular registration for 5 years, henceforth. The changes, though the Finance Act 2020, the changes were to be done, the changes were to be given effect in the financial year 2020-21, but due to COVID situations, the dates kept on extending, and then finally the older registrations were made applicable till 31st March 2021, and the new provisions kicked in from 1st April 2021. So we are in the process now. I have been doing the registrations from 1st April 2021 to a lot of my clients, and we are still in the process, and we are doing it now. So now, and the provisional registration. One thing I would like to thrust upon, why this provisional registration concept has been brought in. This provisional registration concept, I believe, has been brought in because earlier what used to happen when we went for 12A registration or we went for 80G registration, the income tax department का एक ही सवाल होता था, अभी तक आपने एक्टिविटी क्या किया? ट्रस्ट के लोग बोलते थे कि सर आप हमको रजिस्ट्रेशन दो तो हम लोगों के पास जाएंगे, डोनेशन लेंगे और एक्टिविटीज करेंगे. So it was a catch-22. So looking to this practical difficulty, the Finance Act 2020 has come up with this solution that once the organization is formed with a charitable purpose, you may go to the income tax department as soon as you get your registration and you can request them for a 12A registration. And that or 1023 registration for that matter. and you will be given a provisional registration within the time limits prescribed in the law. Once you get that provisional registration, you start with the activities and then go for a regular registration. That is the reason I believe that the Finance Act 2020 has brought this provisional amendment. Lot of provisos have been changed. One more very important change is from the assessment year 21-22. From the assessment year 21-22, the dates of audit has been brought into sync with 44AB. Now, what does 44AB say? That you have to file your returns up till 31st October, provided it is not extended, and you have to receive and update the audit report 1 month prior to the due date of filing the return, which in other words mean that the due date for filing the return is 31st October and the due date for obtaining and submitting the audit report is 30th September. So this is one more change which the Finance Act 2020 has brought in. Because why this change has been brought? Because prior to this change, there were a lot of litigations. Earlier, the audit report may be submitted, may not be submitted, the delay may be condoned, may not be condoned. People used to not file the reports, and then there were a lot of litigations. The department used to disallow 11 and 12. Then people used to again say that it is the filing of audit report is only directory, it is not mandatory. Now, the filing of the audit report has been made mandatory. The dates have been prescribed, so there is no ambiguity as such. This is the tabular presentations. 4 possibilities as far as section 1023C is concerned. One possibility that you already have a 1023C approved institution. Then after, if you are already approved 1023C institution, you will be given registration till 31st March 2026 without much inquiry. Then when you go for a registration again after 31st March 2026, at that time the due diligence, etc., the activities done by you will be checked into, and then you will be granted the registration once again on the merits of your case. So that is the second possibility. Third possibility, as we discussed, provisionally approved organizations. Now, provisionally approved organizations, again, as I said, 3 years ka registration is given, but when you go for regular registration, you will be granted a registration for 5 years. Then the fourth one is totally new trusts. As I told you, that if you are having a totally new trust now, if you go for registration, you will be given a provisional registration, and the registration certificate will be given to you 1 month after within 1 month from the end of the month in which the application is made. As far as your already existing registered trust is concerned, the time limit is 3 months. Suppose if you are making an application in the month of January, the time limit will be February, March, April. Before 30th April, you should get your registration done. But in my practical experience, we have seen that we are getting the certificates relatively very fast. In just suppose if you are making the application in January, most of the cases we have seen that by February end we are getting the certificates. In one more column, last column here, I have mentioned the forms to be used. In situation number 1, the form to be filed is form number 10A, and you will be allotted an approval in form 10AC. Similarly, situation number 2, you will be filing form number 10AB, and you will be given an approval in form 10AD. So this is all academic purpose. Now, one more very important rule which I would like to bring to your notice is, as per Rule 2C of Income Tax Rules, in case of application made under Clause 4 of the first proviso to Clause 23C of Section 10, that means Clause 4 means very new trust. During previous year, beginning 1st April 2021, suppose if you are making an application in this financial year, from 1st April 2021 to 31st March 22, in that case, the provisional approval shall be effective from the assessment year beginning 1st April 2022. That is, you will be getting an approval for the financial year 21-22, that is assessment year 22-23. This arrangement is given only for this particular year because the act is new, the changes are new. But from next year onwards, clause number 4 will be applicable. In that case, if you want to take a registration or if you want to avail the benefits of section 1023C from April 2023, in that case, you will have to file an application latest by 28th of February or 29th of February as the case may be. So coming to section 11.1, we have completed section 10. Now we will talk about section 11.1. 11.1, everybody is very well aware that first of all, the department is nowadays recognizing wholly trusts which are wholly for charitable or religious purpose. Partly charitable or religious purposes, purpose trusts are not recognized for section 11.1. And what does section 11.1 say? That if you are spending 85% towards the objects of the trust, 15% is a statutory accumulation, which is granted to you, and it is for perpetuity. You can carry over 15% for perpetuity, provided you have applied 85% towards the objects of the trust. So that is what section 11.1 says. Now, budget 2021, there has been an amendment. Application from loans and borrowings shall not be considered as application for charitable or religious purpose. However, when loans and borrowings are repaid from the income of the previous year, such repayment shall be allowed as application in the previous year in which it is repaid. So this is one more very landmark change which the budget 2021 has brought into. What does this mean? Suppose if you are spending towards the objects of the trust after borrowing the money, if you are falling short of funds, if you are borrowing funds. So, and if you borrow the funds, and if you spend towards the objects of the trust, that will not be treated as application in that particular year when you borrow the funds. The application will be treated when you repay the loans. So that is what it means. Because otherwise what used to happen is the loans and borrowings used to go to the balance sheet and the expenses used to be debited to the income and expenditure account, thereby leading to a deficit. And then there were litigations about carryover of deficit to the next financial year. So to avoid all those litigations and ambiguity, this amendment has been brought in. Now, income applied on activities outside India. First of all, it's a very big question mark that can we write that we will spend the money outside India? According to me, yes, you can write. Provided you are spending the money on the projects which are notified by the CBDT. Only then you will be allowed to spend money outside India. Otherwise, you will not be allowed to spend money outside India under section 11.1c. Suppose even if you spend the money outside India, 11.1c, and if the project is not notified by the government, in that case, you will be that particular spending will be disallowed and you will be taxed at the maximum marginal rate because you have violated section 11.1c. 11.1d, as we all know, any amount received towards corpus donation is not included in the income. Corpus donation is treated as a capital receipt. Now, based on 11.1a, 1b, 1c, 1d, there are certain important points. Area of operations is one of the important clause in the constitutional document. As I told you, you can write that you want to spend money outside India towards the objects of the trust and towards the objects which are notified, which are in the national interest and notified by the Central Board of Direct Taxes. Tax will be charged in contravention of income spent under section 11.1c covered. Existence of a clause which provides, yes, you should have a clause whereby it allows you to spend money outside India. If you don't have a clause, in that case, if you want to spend money outside India, you have to go back to the charity commissioner, get the trust deed or the constitutional document amended, and only then you will be in a position to carry out those objects. Corpus is like a capital of an organization. Corpus donations are considered as a part of income under section 224(2)(a). However, corpus donation is exempt under section 11(1)(d) and 12. I mean, the members must have noticed that when you prepare a computation, you add the corpus donation under section 224(2)(a), and then you reduce that particular corpus donation under section 11(1)(d) or 12 as the case. Trustees have got no power to treat in their discretion any donation as corpus donation. So what does this mean? That there should be a specific direction from the donor that this money should form part of the corpus donation. Of course, there is no such format defined for it. Based on the case laws, the discretionary letter or the directory letter may not accompany with the donation. It may be given at any point of time. There is no set format, but of course, the trustee has got no discretion to use X amount as corpus donation. The direction has to come from the donor. Corpus donations can be accumulated indefinitely, but there is no provision in prohibition in the Act. Now, what does this mean? Corpus donation can be accumulated indefinitely, but it is not so that corpus donation cannot be used towards the objects of the trust. Money can be used, of course. Now, there is one more amendment to corpus donation also. What does that amendment say? It is again brought in 2021. What does that say? That if you are using some corpus money towards the objects of the trust, the expense or the application, the money spent will be treated as application only when the corpus is compensated with that amount again. Otherwise, it will not be treated as application of funds towards the objects of the trust. So that amendment is there. This is the amendment which I'm talking about. Identity of the donor and voluntary nature of the donation to be established for corpus donation. Yes, of course. Now, there have been questions that whether interest generated on corpus donation can also be treated as corpus. So there has been a case law of 2018, CIT versus Ma Amrutananda Mayi Mat Amritapuri, 2018, that if the donor gives a direction saying that this fund should form part of the corpus donation, corpus fund, and the interest generated on this corpus fund will also form part of the corpus fund. In that case, the interest generated on the corpus fund will also be treated as a corpus donation. So that is what it means. Other conditions to be met for claiming exemption: trust is to be registered with the Commissioner of 12AA, 12AB now. 12AA has been replaced by 12AB. Books are audited as per section 12A1B. That we will cover later on. Very important explanation to section 11(1)(a) and B. What is this explanation? This explanation in a layman's language, let me take a practical example. Suppose if an amount which is to be received in the particular financial year, somebody has committed that I will give you 10 lakhs of donation. You book that income, but the money has not been received till 31st of March 2022. In that case, you have booked that income in your accounts, but you can jolly well, you can set apart that amount. You can file form, you have to file form number 9A saying that this particular amount is accrued as a donation, but it has not been received. So you can spend that amount when the amount is received in the previous year in which the amount is received, or in the previous year next to the previous year in which the amount has been received. For example, if I have not received the amount in the financial year ending 2022, and I received the amount in the financial year 2022-23, in that case, I may spend the amount in the financial year 22-23, or I may spend the amount in the financial year 23-24. That is what it means. Now, one more possibility. Suppose if you receive the donation amount on 31st of March 2022, it is difficult to spend that amount. In that case also, you can file form number 9A, and you can intimate to the income tax authorities saying, I have received this particular donation in this financial year, but I will use this amount, I will apply this amount in the next financial year. That is 22-23. So that particular amount will be taken away from your income, and the surplus will be calculated besides that amount. So this is what explanation to section 11(1)(a) and B is about. Form number 9A. Now, very important thing, form number 9A has to be filed on time. It has been made mandatory. Filing of form number 9A has been made mandatory. Online filing has been made mandatory from the assessment year 16-17. Many of the SSCs, they made a mistake in filing form number 9A. They they did not file or they filed late. In that case, 16, 17, 17, 18, 18, 19. Wide circulars, the department has given a relief saying that you may apply to the CIT to condone the delay in filing form number 9. In many of my cases, we have applied for condonation and the delay was condoned and the deduction was given to us. So that is about, but after now 16, 17, 17, 18, 18, 19. After 18, 19 assessment year, it is a challenge. There has to be no mistake in filing form number 9A, otherwise the entire becomes, the income becomes taxable. So I have covered those circulars also. Explanation 2. What is explanation 2? Restrictive amendment by Finance Act 2017. From financial year 17-18 onwards, any trust or NGO making a corpus donation to another trust or NGO will not be treated as application of income. The same is applicable to 1023C also. Earlier it was not applicable, but now that loophole also has been plugged. Any donation from one registered organization to other or registered organization in the form of corpus donation will not be treated as application of income towards the objects of the trust. But of course, if the corpus donation is given from the accumulated funds, this restriction is not applicable. This restriction is applicable only if the corpus donation is given from the income of the current year. Now, explanation 3 about TDS. 30% of the expenditure will be disallowed when charitable trust was supposed to deduct TDS and it has not deducted. Any payment above 10,000 rupees made otherwise than account pay check or a bank transfer will be disallowed. If the expense is provided and if the expense is made, if the amount is paid in the next financial year or the later financial year in cash, the amount will be disallowed or it will be added back to your income in the year of payment. So this is about explanation 3. Some relevant points again. The reference to the term property does not necessarily mean any movable or immovable property. Business undertaking as covered under section 11(4) is also property held under trust. Budget 2021, one more very landmark amendment. There have been case laws whereby it was decided that set off of deficit in a particular financial year, the deficit in a particular financial year can be set off against the income of the subsequent financial year. Now, lot of litigations because there is no provision in the ITR 7 which allows set off of the earlier deficit. Case laws say yes, you can set off. So that is why Budget 2021 has plugged this loophole now. The Budget 2021 has made it very clear that you cannot set off the deficit of one particular financial year towards the income of the subsequent financial year. Certain case laws, again, very important case laws are, one case law which may be of relevance to everybody is, corpus donation cannot be taxed even if the trust is not registered under section 12A. Now, this is a very recent case law confirmed by Pune Tribunal in the case of ITO versus Serum Institute of India Research Foundation in the year 2018. So this may be of a lot of help to our members, because the members are under the impression most of the times that if we are not registered under section 12A, we cannot take corpus donation, or we cannot claim deduction of corpus donation. Because why this case law? What does this judgment say? The judgment say that capital receipt is invariably a capital receipt, even if your organization is registered under section 12A or not. So this is a very landmark judgment. One more, Thanti Trust. No doubt, if there is no doubt about the authenticity of the application, then it could not be disallowed even if physical funds have not been parted with. Suppose if you have provided for the expense, you have not spent the amount, but that does not mean that spending is necessary. Even if you have provided for the expenses, it is a valid application. So these are some important points. It is not necessary that income should precede the expenditure. The application has got a larger meaning than spent. That is what it means. Even if 100% of income is donated to another valid trust, the entire donation shall be treated as application for charitable purpose. Very important point again. The rest, there are some other case laws. For those who are interested, they can go through this PPT. I have made a very elaborate PPT. 11(1)(a) talks about capital gain. Capital gain, according to me, has to be seen on a case-to-case basis again. The only thing is, suppose if you are selling a capital asset and investing the entire amount in one more capital asset, in that case, the entire capital gain will be exempt. One important point as far as capital gain is concerned is section 50C is not applicable. 50C means, everybody knows what 50C is. We suppose if the market value is higher than the agreement value, for all practical purposes, the market value will be treated as the consideration. But that is not so as far as a charitable trust is concerned. Otherwise, everything has to be done on a proportionate basis. Even income, even if the money which is received after selling the capital asset, if you are applying towards the objects of the trust, it is a valid application. Even if you are investing the money received after the sale of a capital asset in a fixed deposit for a period of say 6 months also, in that case also it will be treated as a valid investment. And the gains arising from the sale of the capital asset will be exempt. Section 11(1)(b), consequences of non-application of income after exercising options under section clause 2 of explanation 1 to subsection 1 during the period mentioned in subclause A or subclause B of the said clause. What does this say? We are referring to form number 9A over here. Suppose, as I told you, if you have received the amount in the financial year 21-22 and you did not spend the amount in the financial year 22-23. So that means you may be taxed in the financial year 22-23 or 23-24 as the case may be. In the case referred to in subclause 1 of the said clause of the previous year, immediately following the previous year in which the income was received. In the case referred to in subclause 1 of subclause said clause of the previous year, immediately following the previous year in which the income is received. Now suppose I have booked an income in financial year 21-22. I received the income in 22-23, but I did not spend the amount in 22-23. So it will be taxed in the previous year 23-24. In the case referred to in subclause 2 of the said clause of the previous year, immediately following the previous year in which the income was derived. Suppose I have received the amount in the financial year 21-22 and I have not spent the amount in the year 22-23, it will be taxed in the financial year 23-24. No, I'm sorry. It will be taxed in the financial year 22-23. If I have received the income in 21-22, did not spend the amount in 22-23, it will be taxed in the financial year 22-23. Once the income is earmarked under section 11(1), it cannot be further earmarked under section 11(2). Most of the people, they may so decide that I could not spend the amount under section 11(1). Let me earmark under section 11(2). So that is not allowed as per the Act. 11(2) we will cover later on. Section 11(2). Now what is 11(2)? 11(2) says that if you have got a capital expenditure to make in the near future, in that case you may accumulate the amount and you may earmark the amount for the next 5 years. But of course, you have to spend that amount in the next 5 years. Otherwise, it will be taxable. That amount will be taxable in the 6th year. So that is what section 11(2) says. Why this section has been given? This section has been given for capital expenditure. Suppose if you want to come up with a building. Now building के लिए पैसा एक साथ तो नहीं आ जाएगा. थोड़ा-थोड़ा आएगा. So you can accumulate over the period, you know. और एक साथ खर्च भी नहीं होगा. So that suppose 21-22 में you received 10 lakhs. 22-23 में you received another 10 lakhs. You may be having a project of 50 lakhs. You may accumulate that amount over a period of 5 years, and then you may spend the amount proportionately over a period of 5 years. So that is why this facility is given. But if the amount is not utilized in the prescribed time, in that case, that amount becomes taxable in the last year. That is the 6th year. Now this also, the form number 10. Now we had form number 9A. In this case, we have form number 10. Form number 10 has to be filed before the due date of filing the returns. And the returns also have to be filed in time. Only then you can avail the benefit of section 11.2. Otherwise, you will not be in a position to avail benefit under section 11.2. Similarly, it was made mandatory from 1617 to 1617, 1718, 1819. Circulars were issued. CIT was given power to condone the delay in filing form number 10. But now henceforth, what we have to do is, if you want to avail the facility under section 11.2, you have to file the returns on time. You have to file the audit report in time. And there is no leeway. Suppose if the due date for filing the return is 31st October, you cannot file it on 1st November. If you file it on 1st November, the facility under section 11.2 will be denied. So that is about 11.2. Some important points for the benefits of the members. You can just go through these points. Otherwise, I have covered 11.2 also. Exemption of section 11.2 withdrawn. Now, what is the possibility where exemption under section 11.2 can be withdrawn? Section 11.2 can be withdrawn if it is applied to purposes other than the purpose for which it was accumulated. What does this mean? In other words, mean that when you write to the income tax department via form number 10 that I want to accumulate so and so amount for so and so purpose, the purpose also should be clear. You cannot generalize saying that I want to use this amount for in the next 5 years towards the objects of the trust. You have to specify for what objects you are earmarking the funds. Of course, the objects may be more than 2. The objects may be more than 1. That is not a problem. You can always write, but you have to be specific. And that is one possibility. Second possibility of denial, ceases to remain invested in mode specified in section 11.5. What does this mean? That the amount has to be invested in the modes prescribed under section 11.5. If the amount is not invested as per section 11.5, the deduction will be withdrawn. If the amount is not utilized for the purpose within the period and for the purpose for which it is so accumulated, in that case, the deduction will be withdrawn. And if the accumulated amount is donated to another trust, before 2002, what people used to do, they used to donate that amount to other trusts. If they are not in a position to spend, donate it to some other trust. But that loophole has been plugged from the year 2002. Now you cannot donate the amount accumulated under section 11.2 to another charitable trust. So that is about 11.2. 11.3a, modification of objects. There might be situations where it has become practically difficult for the charitable organization to carry out the objects for which the amount has been accumulated. In that case, you may approach the income tax department under section 11.3a and request for a modification in the objects of the trust. You may request him, satisfy the assessing officer saying that it has become difficult for us to execute the objects for which the money has been utilized, for which the money has been earmarked. And you have to also assure him that the money will be spent, the unutilized money will be spent towards the objects of the trust which are already covered in the constitutional document. So that is how it is. And again, you cannot donate to another trust. The income tax department, only in the case of a dissolution, the amount can be clubbed with some other charitable trust. Otherwise, it cannot be done. 11.4a talks about business undertaking. Business undertaking, charitable organization running business undertakings. Now, business undertakings, again, the 20% wala thing which we had covered earlier. Now, one very important judicial pronouncement which I would like to bring to the notice of all the participants is the case law is ACIT versus Thanti Trust. Again, it is a very landmark judgment where even unrelated business held as property of the trust are treated as incidental provided the entire income is applied for charitable purposes. In other words, use of income will determine the incidentality of the business. Now, you may be running a business. In my practical experience, I have seen that you are running a business which is not related to the trust, but the surplus arising from that business activity is utilized towards the objects of the trust. In that case also, the purpose will be treated as charitable and you will get the necessary deductions under section 11 and 12. You have to justify and prove your case accordingly. There should be no profit motive, in other words. Activity for profit is fine, but there should be no profit motive. One very important point, there is nothing in the statute to suggest that tax audit under section 44AB shall apply to business undertaking. Tax audit is not applicable. There are a few case laws regarding incidental business, very good case laws, which have thrown a lot of light on this subject. Section 11.5, it is just, a list of things which we can, list of modes where we can invest our money. I am not reading all these things. The list is given. You may go through the list for your academical purpose. The latest thing which has been added into this list is stock certificate as defined by Sovereign Gold Bond Scheme 2015. A few case laws also have been cited. One more very important thing, that if you invest an amount in violation of section 11.5 and if you generate some income on that particular investment, only that income will be taxed at the maximum marginal rate, not the entire investment, or the trust will not lose the entire exemption. Only the income arisen due to violation of section 11.5 will be taxed at the maximum marginal rate. 11.6 says that depreciation, once you have debited the cost of the entire capital asset to the income and expenditure account, you cannot take depreciation on that particular asset. 11.7, what does 11.7 say? Earlier, you were in a position to avail the deduction under section 1023C also and under section 12A also as per your convenience. But 11.7 has been amended. Now, you can either claim deduction under section 12A or you can claim deduction under section 1023C. If you have both the registrations, 12A will be cancelled. You will continue with 1023C. If you so decide that you want 12A again, you have to apply again under section 12 under section 12AB, and then only then 1023C will be cancelled and you will run your organization under section 12A. So that is the amendment under section 11.7. Section 12, what does section 12 say? Section 12 talks about voluntary contribution. Section 11 talks about income arising from the properties held under the trust. And section 12 talks about the voluntary contributions. Both have to be clubbed together to arrive at the total income of the trust. Then we have to debit the expenditure towards the objects of the trust. And then we come up with a deficit or the surplus as the case may be. Value of services also has to be added back. Suppose if the trustees have availed services in an educational institute or a medical institute, in that case, the benefits given to the trustees will be added back to the income. 12A. 12A, of course, is the conditions for applicability of section 11 and 12 of the Act. You have to apply for registration, one of the conditions. Then in section 12A, 1A, 1AA, I particularly feel 12A, 1A and 12A, 1AA is not of much relevance now because an entire new section has been introduced, 12A, 1C. So we will 12A, 1AC. So we will totally focus our attention on 12A, 1AC, which has been introduced by the Finance Act 2020, which again talks about the procedure which we have already covered, that the registration will be renewed every 5 years. The time limit has been given within what time the registration has to be given or denied. If the application has to be rejected, a reasonable opportunity has to be given to the client to put up his case. And one more very important thing which I would like to bring to your notice is, after the amendment in section 12A 1B by the Finance Act 2020, this clause specifically provides that audit report should be obtained and furnished at least 1 month prior to the due date of submission of return under section 139. That we have already covered when we discussed 1023C. Now, condoning the delay in filing form number 10B is also more or less ruled out. Earlier, condoning the delay in filing form number 10B was also possible, but now if form number 10B is not filed on the due date prescribed, that is 30th September, then in that case, all the deductions under section 1112 will be denied to you. 12A 1BA was introduced, whereby it was saying that you have to file the returns on the due date, otherwise you will not get the exemption. But then there was a clarification on 23rd April 2019 saying that the returns can be filed as per section 139(1) of the Act, and 139(1) says that you can file the returns up to the end of the assessment year. So there were a lot of demands had been raised at that time, but all the demands had to be reversed because there was a misinterpretation of law. 12A2. Now what does 12A2 say? 12A2 talks about the applicability of the registration in relation to 12A1 AC1 above, that is existing trust registered under section 12AA from assessment year from which such trust was earlier granted registration. Now what does this mean? Suppose if your trust was registered on say 1st April 2018 and now you have applied for re-registration on 1st April 2021 and the registration is renewed till 26. So in that case, your trust will be treated as registered right from the 1st of April 2018 to 31st of March 2026. That is what it talks about. In relation to 12A1 AC3 above, that is provisionally registered trust from assessment year from which trust was earlier granted provisional registration. Same, if you are granted provisional registration from financial year 21-22, in that case, and if you get a regular registration in say 2024 or 25, your trust will be treated as registered right from the financial year 21-22. This is what 12A2 says. Mention of 6 clauses that we have covered at the when we did the formation of the charitable trust. 12AA procedure, thus for just for academic purpose I have written, because 12AA is totally replaced by 12AB now. So we'll go straight. A few case laws are there which may be of the importance of members who are dealing with old cases. So they may go through it. 12AB procedure for fresh registration. Again 12AB, I think we have covered elaborately when we discussed 1023C and time and again. So I think again in this also I have given a chart. A few case laws are there and I have given a chart of the timelines and the forms to be used for application and the approval, the form in which the approval will be received. And the relevant rules, etc. are all mentioned in this chart. So members may go through it because I think I will cover the other things in another 10 minutes because we are running short of time. This chart is also given for the benefit of the members or participants out here. Income of the charitable organization, how does it move? Section 11(1)D, 11(1) ABC covered. How does 85% apply? Form number 9A, 10. Whatever we have covered from 11 to 12 is mentioned out here. Then coming to section 13, denial, withdrawal of exemption. This is an exception to section 11 and 12. When will the exemption be withdrawn? Under section 11 and 12. The exemption will be withdrawn if income is applied for private religious purpose. Exemption will be withdrawn if it is used for a particular religious community or caste, except trust or institution established for benefit of scheduled caste, scheduled tribe, backward class or women and children. Of course, there are a lot of case laws which throw a different light, but we have to go through all those case laws. I have cited a very few important case laws in this, which will definitely help the participants. Income applied for the benefit of specified person mentioned in section 13.3, and specified persons are defined in section 13.2, which we are coming to later on. Funds invested or deposited otherwise than in any one or more form of subsection 5 of section 11. This we have already covered when we discussed 11.5. Now, one more very important thing which a lot of professionals may be facing regarding donation in kind. Now, what is donation in kind? Donation in kind, how do you reflect in your balance sheet? Donation in kind, usually it is reflected on the corpus side, or it is shown as a capital receipt and a corresponding asset is shown on the asset side. Why? Because it is not mandatory that you have to convert the donation in kind into rupees and then invest as per section 11.5. So there have been many case laws which says that if you are showing the donation in kind on the asset and liability side correspondingly, it is a fair enough treatment, because it is not binding on the trust to convert that particular donation in kind so that it can be invested in the mode specified in section 11.5. 13.2, these are the services or these are the concessions which a trust, if these are the concessions given to the specified persons, if there are, these are the concessions which may be given to the specified persons and which may bring a particular organization into trouble. For example, any part of the income or property of the trust or institution is lent without charging adequate rate. Any benefit given to the specified person without adequate compensation will land you into trouble, will lead to a denial of deduction under section 11 and 12. So all these things are mentioned over here. What are the possibilities? Of course, there are certain case laws which say that a reasonable rent is allowed, a reasonable remuneration of course is allowed if the person is qualified and if they are rendering services. For example, if a doctor is running a hospital, charitable hospital, and they are getting remuneration against their professional services, so that is allowed, provided it is reasonable. Anything which is reasonable is allowed. 13.3, definition of a specified person. I am not going to into the definition part. 13.4, exemption shall not be denied if the investment of the trust or institution in a concern in which the specified person has a substantial interest, provided such investment is not more than 5% of the capital of that concern. If the trust invests in an organization in which the specified person has got a substantial interest, this will lead to denial under section 11 and 12. But if the investment is less than 5%, it is fair enough. You will not be denied exemption under section 11 and 12. 13.6, again, services given to the trustees. Fair value has to be calculated. It has to be added to the income and then taxed accordingly. 13.7, coming to 115 BBC, anonymous donation. Anonymous donation is a donation which has, whereby you don't have the name and address of the person in a layman's language. Tax payable will be aggregate of 30% flat rate of tax on anonymous donation in excess. Suppose if your organization has received a total income of say 10 lakhs. So 5% of 10 lakhs, 5% of 10 lakhs is 50,000 rupees. And 1 lakh rupees, whichever is higher. So in this case, 1 lakh rupees is higher. So anything about 1 lakh rupees, anything above 1 lakh rupees, anything above, suppose if you are receiving anonymous donation of 1 lakh 50,000, 50,000 will become taxable. So that is what it means. So aggregate of this tax plus you have to calculate the income of the trust, keeping aside the anonymous calculation. One part of the tax will come from that particular calculation and the other part will be 30% on the anonymous donation calculated as per the formula. So that will be the total tax which the organization will be liable to pay. Of course, there are exemptions. Holy religious purpose. If a trust is made for holy religious purpose, in that case, anonymous donations will not be taxed. Suppose it is a composite trust, and if the donation is made toward religious part, then in that case it won't be taxed. And if it is made towards the charitable part, it will be taxed. Anonymous donation has been defined. Now, one more very important thing, you must be coming across a lot of temples who are receiving donation through donation boxes. What is the treatment? I mean, the Finance Act or the speech of the finance minister was very clear that for petty donations, this law is not applicable for petty donations. If the donation is received in donation boxes, it need not be taxed. It need not be treated as anonymous donation. Why this provision has been brought into account? Why this thing has been brought? This thing has been brought to avoid round tripping of the funds. There have been many organizations who are turning their so-called black money into white money using the charitable trust. So to avoid that particular thing, this particular anonymous donation concept has been brought in. So again, on a case-to-case basis, this anonymous donation thing has to be understood and has to be explained to the income tax department on a case-to-case basis based on the requirement and the situation of your clients. Now, I have written a few case laws also, and people may go through the case law. Section 13(8), again related to section 215. This I have covered when I was talking about 215. So 13(8) says that if the limit of 20% is crossed in a particular year, only in that year you will be denied exemption under section 11 and 12. Because if the 12A was cancelled, if the limit exceeds 20%, in that case, the provisions of accreted income, that is 115 TD, TF will kick in, and the charitable trust will land up into a huge tax liability. So that is why 13(8) has been brought in. 13(9). What does 13(9) say? 13(9) is related to 11(2). If you want to avail the facility of section 11(2), in that case, the return has to be filed on or before the due date. The audit report has to be filed on or before the due date. Only then you can avail the facility of section 11(2). Otherwise, the facility of section 11(2) will be denied. The similar thing is not applicable to 9A. In the case of 9A, you may file the return up to the end of the financial, up to the end of the assessment year, relevant to the financial year. 9A it is allowed, but in 10 it is not allowed. 8IG, of course, I don't need to cover much on that. The only thing is 8IG, again, it will be issued for a period of 5 years on a renewal basis. It is an approval under the Income Tax Act section 80G. And some important points that you cannot make donations in cash over 2,000 rupees. Suppose if a donor is making a donation of an amount more than rupees 2,000 in cash, he will be allowed a deduction only up to 2,000 rupees, not over and above that. Any trust spending more than 5% on religious objects will not be allowed approval under section 80. Amendment by the Finance Act 2020, again, 5 years wala funda provisional registration, again, same as 1023C and 12A. CSR expenditure, can CSR expenditure can be claimed? Yes, there is a case law of 2019 IT80 Bangalore. Again, the table showing the dates. Now, two more sections introduced, 234G and 271K. As similar to TDS returns, each and every trust will have to file the details as regards the donations received, and the donations made will be reflected in the 26 years of the donors. You have to issue a certificate. This statement is to be filed annually, and if there is a delay in filing, 200 rupees per day will be recovered as late fee, and simultaneously penalty not less than 10,000 up to rupees 1 lakh will be levied. 115 TD, TE and TF. What is TD, TE and TF? Again, accreted income. If there are many situations whereby your trust will be denied registration under section 12A, what are those situations? Converted into any form not eligible for registration under section 12AB, merged with any trust or institution not having similar objects, on dissolution failed to transfer all its assets to any other trust or institution. These are the three situations whereby the entire amount becomes taxable. What does entire amount mean now? Total of asset side minus the liability side. And not only total of asset side, fair market value of the asset side minus fair market value of the liability side, and the remaining amount will be taxed at the maximum marginal rate. So of course, I believe that this is a very harsh provision, but of course it is there in the Act and we have to abide by it. Then time limits are mentioned, that within what time you have to file the appeals, within what time you have, if you don't file the appeal within the prescribed time, it will be treated that you are not eligible for 12A or your 12A has been withdrawn. and you will be taxed as per the provision of 115 TD-TETF. This particular chapter defines that who will be the person in default and what will be the interest recovered in the case of delay in making tax payments. Interest payable, TF. So that is about 115 TD-TF. Of course, there are a few fundamental things which I have jotted down. Now, according to me, the mandate of Income Tax Act is confined to taxing income only and not assets, whereas 115 TD-TETF proposes to tax assets. There are many situations whereby, for example, 115 BBC, you must have already paid taxes on 115 BBC. The amount must have been accumulated. But then too, under 115 TD-TETF, the Income Tax Department proposes to double tax the accumulated amount. So that is again, I believe a lot of litigations will flow in as far as 115 TD-TETF is concerned. We expect some amendments because of this last 2 years Corona period. The department must have not studied these provisions once again, but a relook is definitely justified in this case. So that is about 115 TD-TETF. Coming to the last sections, 164(2) and 3 and section 167B. Now, a lot of members must be facing challenges whereby your trust is not registered under section 12A. You are filing the returns. There is a certain gross amount and there is a certain expense and there is a certain surplus or deficit as the case may be. But in the absence of registration under section 12A, the Income Tax Department is mailing intimations under section 143(1), whereby the entire gross receipt is put to tax and huge tax liabilities are generated. Why this is being done? Because the Income Tax Department is taking shelter under section 164(2) and 164(3). Sorry, 167B. They are saying that your organization in the absence of 12A will be treated as AOP and AOP is to be taxed at maximum marginal rate. And because section 12A registration says that if you do not have registration under section 12A, you will be denied deduction under section 11 and 12, which in other words means that whatever you have spent is totally disallowed. But according to my understanding, as per basic accounting principles, the expenses should also always be allowed, irrespective of the fact whether we are registered under section 12A or not. One thing. Second thing is, coming to section 167B. 167B specifically excludes organizations which are registered under Societies Registration Act or similar legislations. 167B is applicable to AOPs where the beneficiaries' shares are defined, whereas in a charitable organization, the share of the beneficiaries cannot be defined and are never defined. So that is why, according to me, 167B should not be invoked to tax the charitable trusts which are not registered under section 12A. A holistic view of 164(2), 3 and 167B has to be taken. And as per KMR Educational Society case also, it was decided that the income has to be computed in commercial manner, even in the case where the exemption is denied. The capital receipt cannot be taken as income of the assessee. Moreover, the revenue expenditure has to be reduced against revenue receipts to arrive excess deficit of the income over expenditure. So this is about 164(2), 167B. So I think this should help a lot of members, because I myself have faced a lot of cases like this, and a lot of other CAs who are in touch with me are facing these challenges. So I think 164(2), 3 and 167B should help all the members, and the case laws which I have cited should help all the members. So with this, I mean, last 2-3 sections I have taken a bit fast because of the shortage of time, because earlier some 10 minutes we had to do the formalities. But in any case, I've tried to finish the particular subject in time. I hope I have not taken much time of the members, and the today's talk has made sense to all the participants. And I definitely believe that this talk of mine will help all the members, and I'm open for questions now. Back to Sunil ji.
Yes. Thank you, sir, for wonderful deliberation.
Thank you,
Over
sir.
to Sanket bhai. Yes, sir. Thank you very much, sir, for your excellent deliberation, and your presentation drew the audience and held their attention for at least 2 hours. We all admire you, sir, for your in-depth knowledge, and surely this will help to our members. Indeed, it was an amazing and fruitful session. And thank you once again, CA Raviji Gupta, sir, for sparing your time with us on this webinar. Now, we are moving towards the query session. So for further proceeding, I would like to give the charge to CA Vikiji Birla, sir, the Vice Chairman of Jalgaon branch. Over to CA.
Yes, thank you very much, sir. But before moving ahead to question and answer session, I take this opportunity to thank our speaker, CA Ravi Gupta, sir, for such a fabulous session. Sir, you delivered such a complex topic in a lucid and simple language, and that too with case laws. Sir, you are a truly trust guru, we can say. It's our pleasure of both the branches that you have given your precious time to guide our members. So thank you once again. And I would like to also thank CS Shweta Jain ma'am, newly elected RCM, for joining and giving her guidance. So now I request all the members, if you have any query, you can go ahead and can ask to our experts. Members can unmute themselves, or they can type their query in chat box. Forum is open for all.
Vicky bhai, there are few queries in chat box.
Yes, if any member can, would you like to ask direct live query, then we can cover queries in chat box. Sir, there is a query. If we had filed a nil audit report, that is Form 10B, and also nil original income tax return within due date, and later we revised the audit report and income tax return, then whether the trust be eligible for claiming exemption under Section 11 at the timing of filing revised return and Form 10B?
No, first of all, whether we have to first see whether, first of all, whether the organization is registered under Section 12A or not. Frankly speaking, form number 10B, in which we have to file the audit report, is applicable only to organizations registered under Section 12A. And audit report has to be filed if the income of the charitable trust, without giving effect to deduction under Section 11 and 12, is more than, is 250,000 is more or more than 250,000. So the query which has been raised by the respected member, I mean, I will need some more information on that before precisely answering her query, her or his query, as the case may be. Because whether I would like to know whether the trust is registered under Section 12A or not.
Members can reply or can unmute themselves. I think member is not present, sir.
We can move on to the next query by the time.
Excuse me, sir. I would like to ask some question.
Yeah.
My name is Divya.
Yeah.
Am I audible, sir?
Yeah,
Yes,
yeah.
yes.
So my query is, if I have a particular client, he has not uploaded any audit report yet, but he wants to apply for ATG, whether the provisional certificate will be allowed to him on the basis of the same, and his total income is less than 250,000.
See, ATG, first of all, definitely he will get ATG. There is no doubt about it. But first of all, before applying for ATG, you have to procure 12A. Because registration under Section 12A is a precondition to registration approval under Section 18. First, you got to take 12A. You will get a provisional registration under Section 12A, and then you can immediately go ahead for applying ATG. And you will get ATG then in that case. First of all, you got to take 12A.
And there is a prerequisite to upload your audit report. So,
Of course there is.
even if there is no transactions in that audit report, then also we have to upload the nil report, right?
Yeah, you can upload your accounts, whatever accounts you have prepared, you can upload those accounts. If the income, as you said, is below 2,50,000, 10B is any case not applicable because you don't have registration under section 12A. And
Okay.
below 2,50,000, there is no other audit required. And you must be submitting your account to the charity commissioner also.
Right.
You can submit those accounts when you apply for 12A. And let me tell you very frankly, in our experience, we have seen that the department is not creating a fuss about giving provisional registration. They are not scrutinizing much. What they are seeing is whether there is a valid registration certificate, whether the accounts are prepared, the accounts are uploaded. That's it. Otherwise, they are not going into much detailing. That is why this provisional registration ka concept has been brought in.
Okay. Thank you
At
very
the time of filing,
Sir, I have got
if you face
one
any other
query.
practical difficulty, you can contact me.
Gupta
Thank
sir,
you
I have
very
got one
much,
query.
sir.
Sir, there is yes, member.
Vicky, I have got one query. Can I ask?
Yes,
Yeah.
yes, please.
Sir, I have got the PAN card with the status of form.
Huh.
Can I change the status of the PAN card?
Sir, in my practical experience, I have seen that it is very difficult to change the status of the PAN card because we have also tried in a couple of cases, but somehow we could not do it.
Then what
And
is your
is the-
suggestion, sir?
Is the trust old or is the trust new?
It is old now. Already we have got the 12A ATG registration also.
Railway registration also you have got.
Now I am facing problem in filing ITR 7.
I understand.
And
We
one more
also face-
problem I am facing in the case of IFCR.
Yes, I understand. Because the status in the PAN card, it is mentioned F instead of T.
Yeah.
That is a major issue.
Yeah.
Because we have tried, but somehow we were not in a position to change the status.
Now we should carry with the same way. But how to file the 7 form 7?
But if you are carrying on with the same way, we are not in a position to do our other things.
Yeah.
You are not in a position to do your FCRA. I mean,
Yeah.
you can. I'm not aware. Last what update I have got. My partner is looking after that case. I can get back to you. What is the latest update on that? My case
Yeah,
also
please,
is
sir,
similar.
because now I am facing a lot of problem because of this now.
So you share me your number, or I mean I have shared my number with Mr.
Yeah. I just put it in the chart now.
Please do that so that I can get back to you on this regarding
Yes,
my
thank
case. What is the status? I will check with my partner and I will call you personally.
Is there any way available to represent with the department to get this query solved with the whatever the trustees are there?
I am afraid,
Any
sir.
platform?
I mean, in this faceless scenario, it has become more difficult now.
Okay, thank you, sir.
But of course, I will get back to you on this because I
I
have
am
got a few
putting
cases
my
also.
number in chat.
Please.
Okay, sir. Thank you.
So moving towards our next query. Sir, the query is if we made mistake in registration of section 12A and ATG, whether there is any revision, this mistake is of clause number, but before revision, can we got the number also? Means,
There is a mistake in 12A and ATG registration.
yes.
Okay, but in any case, when we are filing 12A ATG now new, because if you have a old 12A and ATG registration, in this financial year we are supposed to file re-registration and re-approval. So in that case, all the mistakes will be taken care of. What is the mistake which the member has written?
Sir, he's saying we got the provisional registration number. Members can unmute and can directly ask.
Yeah, please.
So I request Rajesh sir to please unmute or so they can elaborate their query to sir. Or they can type.
Sir, I think Rajesh sir, continue.
Yes, sir, please.
The mistake is of clause number. I think, sir, they have mentioned the wrong clause number in registration, provisional registration.
They have mentioned a wrong clause in the provisional registration.
Yes. That should,
we have also got certain registrations with a different clause, but I don't think we should worry much about it, because if we go for a rectification, we have seen that in our practical experience it is not rectified. We should sit tight with the provisional registration which we have for all practical purposes. I don't think we should go for a change in that, because still there are a lot of issues as far as the registration is concerned, because in 12A and ATG registration, they are writing certain subject to conditions which are not as per the Income Tax Act, which are absolutely not as per the Income Tax Act. But then too, for all practical purposes, that registration will hold good. So we may continue with that particular. Yes.
Okay.
Vicky bhai, continue. Next query.
Sir, this is very newly registered trust after getting 12AA, apply for ATG without having audit report.
Yeah, sure.
Okay.
He will get a provisional registration.
Yes, I think there is. Sir, is there any possibility that can we expect amnesty scheme for the outstanding demand payable regarding trust in near future?
Sir, amnesty scheme will come for the entire, for all the SSCs, not only for trusts. But till now, I mean, there is no such possibility I can see. Because, amnesty scheme in the sense, we will have to see that what is the liability which the trust is facing. Because, in my experience, I have seen that a lot of trusts, they are facing with liabilities which are not genuine. And the members do not have the required expertise to contest that particular demand. Now, for example, I spoke about 164(2)(3) and 167B. That is a very landmark discussion. I mean, there are a lot of demands are because that the trust is treated as an AOP and levied with maximum marginal rate. So the type of demand has to be seen. I feel that you may not need to go for an amnesty. You may not need to go for an amnesty scheme. We can fight it successfully.
Okay, sir. Any further queries? Okay. I think all queries are sorted out. Your permissions, can we proceed further, sir? Sir,
Yes, sure. Please do.
AA society received share capital gain, whether taxable under other sources?
Whether society received capital gains?
Yes, whether taxable under other sources.
No, according to me, if we are talking about a charitable organization, whatever, when we prepare an income and expenditure of a particular organization, all the incomes are included in the income part. Whether it may be donation, whether it may be interest received, whether it may be any other type of income. And then against that, we are writing the amount which has been spent. We are debiting the amount which has been spent towards the objects of the trust. And after considering all the incomes and all the expenses, we come down to deficit or surplus, as the case may be. So there is no concept of other sources as such in a charitable organization.
Sir, if the trust is unregistered, which ITR should be filed?
If the trust is unregistered. If the trust is unregistered with the charity, if it is not registered at all with the charity commissioner, in that case it becomes an AOP. Then for that particular case, you will have to file under an ITR 5. If it is registered with the charity commissioner, invariably you have to file ITR 7. Even if it is not registered under section 12. A lot of people have a misconception that if we are not registered under section 12A, we should file ITR 5. But my humble opinion is, even if your trust is registered under section with the charity commissioner and do not have a registration under section 12A, then too you should file ITR 7 invariably.
Okay, sir.
Unregistered trust, of course, ITR 5 should be filed.
Okay, sir. Thank you. Sir, how private trusts differ from charitable trust and how to form a private trust?
Private trust, frankly speaking, there is no regulatory body for private trust. Private trust is as good as an AOP. The difference between a private trust and a public trust is, in a private trust, the beneficiaries are defined. And the shares of the beneficiaries are defined. Whereas in a public charitable trust, the shares of the beneficiaries are not defined, and the beneficiaries are always a fluctuating body. That is the difference between a private trust and a public trust. Besides other differences, these are the major differences. Private trust, there is no specific authority whereby you can go and register a private trust.
Thank you. Whether non-12A trust is also compulsory for 12AB registration?
Pardon me? Whether non-12A?
12A trust is also compulsory required to go for 12AB registration?
Not required. It is optional. If you are registered with the charity commissioner, if you wish, you may go for 12A registration. If you do not wish, you may not go for 12A registration. It is not compulsory. I would like to cover one more thing over here. Most of the members may be knowing this, but then to let me reiterate again, that when you avail a 12A registration, 12A registration gives the institution exemption from income tax, whereas ATG approval gives the donors deduction from tax. So 12A registration is for the donee and ATG registration is for the donor. So that is the difference in these two registrations or approval, whatever you may call it.
Thank you, sir. Now all the queries are sorted out. So thank you once again, sir. And for closing remarks and further proceeding, I hand over session to MOC CA Saket Mehta, sir. Thank you. Thank you once again, sir.
Thank you very much, sir. As now there is no query from our member side, so we are now inching towards the end of this webinar. So for this, I would now request C. Pawanji Jaju, sir, the Vice Chairman of Amravati branch, to please give his closing remark and also vote of thanks on our today's webinar. Now over to C. Pawanji Jaju.
Thanks, Saket bhai. Sir has very well covered the format. Sir has very well covered various sections like formation of trust, importance of Schedule 1, and Section 215 of IT Act, Section 1023C, provisions of provisional registration certificate, Section 11(1), income section, Form 9A, exemptions, various exemptions in Section 12A(1)(c), various case laws, Section 12AB, Section 13(1), etc. Very well, and sir has a stream. I think Trust Act is now streamlined and everything is clarified. There is no more confusion. Thanks a lot, sir, for detailed and step-by-step explanation. Let's move ahead towards vote of thanks. But before that, I would like to make one announcement that tomorrow we are going to celebrate 26th Jan. So we are having at Amravati branch, we are having full body checkup, food distribution, flag hosting, friendly cricket match with GST department and TBA tree plantation, etc. So all the members are requested to please gather at 7 AM in the morning at branch premise for various activities. We are having flag hosting at 9:15 and various activities. Let's move ahead towards vote of thanks. First of all, we thank RCM Shweta Jain ma'am from Vasai, currently WRC member and past chairman of Vasai branch. Thanks, ma'am, for suggesting such a superb and learned speaker, Ravi Gupta sir. Thanks for your recognition of CMR and your kind words. We would like to definitely invite you to Amravati. We will definitely contact you, ma'am. Then we thank our today's speaker, Ravi Gupta sir, who is from Bhayandar. Very well and detailed topic. We thank our Jalgaon team. We have with us Vicky Bhai Birla, Vice Chairman Jalgaon branch, and Prashant sir for your joint efforts. We thank our today's coordinator Saket Bhai and Bhagyashree ma'am for your excellent ABOC and introduction. We recognize the presence of past chairman of Amravati branch and Jalgaon branch. We also thank our entire participants, 60 plus, we were having 67 participants. And we also thank our entire participants. We also thank upcoming managing committee of Jalgaon and Amravati branch. Thank you one and all present over here. With this, we are concluding these sessions. Thank you. Thank you very much.
Thank you, sir.
Thank you.
Thank you, sir. Should I conclude the session?
Yes, yes. Ravi, sir.
Yes, sir.
Should we conclude? Thank
Yes,
you,
sir.
sir, very much.
Yes, sir. Yes, sir.
Ravi, sir.
Yeah.
Sir, are you there? Yes, sir.
Yes,
Sir,
yes.
one query I have. Last 2 minutes, sir.
Yeah.
As you already said that temples come under religious purpose,
Right.
and most of the receipt expenses they do under religious category, more than 5%.
Right, sir.
So, is it possible for them to get ATG? How they will get ATG, sir?
It is possible to get ATG, sir, because I am dealing with a lot of temple trusts, and it is about classifying the expenditure. Because when we say that we are running a temple, that does not mean that all the expenditure related to a temple are falling under the religious category. Because there are many expenditures which are not related to the religious category. For example, I would cite the example of ISKCON, for example, International Society for Krishna Consciousness. It is on the face of it, it is a religious organization, but they are doing a lot of activities which are not religious, which are charitable activities. So we have to make a classification between the charitable activities and the religious activities. Only the expenses which are related to the worship of God may be classified under religious activities. All expenses, all the temples are doing other charitable activities. And there has been a judgment from the Supreme Court. For example, if it is a Hindu, if it is an Hindu temple, the Supreme Court, Honorable Supreme Court has decided that Hindu is not a religion, it is a way of life. So the shelter of that particular judgment can be taken, and we can classify the expenditure in such a manner that the expenditures, in most of the cases I have seen, the expenditures, religious expenditures, fall under 5%. And in those cases, we have gone ahead, we have 12A is obviously applicable, 12A can be availed. We have availed ATG also successfully, and all those trusts are running very nicely.
Thank you, sir.
100% it can be done.
Thank you, sir. Thank you very much. Now, I think we should move ahead with thank you, sir.
Ravi, sir. Thank you very much for gracing the occasion, sir.
Thank you for giving me the opportunity.
Yes,
Thank
yes.
you, sir, for taking your valuable time.
Thank you for giving me the opportunity. हमारे पास बहुत क्लाइंट आते हैं, वो कहते हैं कि सर आपका टाइम बहुत ले लिया, तो हम उसको बोलते हैं हमारे पास टाइम ही और है ही क्या हमारे पास.
यस सर, बहुत टाइम मिला आपका, इतना बिजी शेड्यूल से निकाल के आपने जो डिलीवर किया, बहुत अच्छा सेशन था.
सर सीखने को इसी बहाने हम सीख लेते हैं.
मैं
अभी 2 दिन से तैयारी कर रहा हूँ, तो मैं और हर सेशन के साथ मेरी नॉलेज और पक्की हो जाती है.
नहीं बहुत पीपीटी जो शेयर किया मैंने मेंबर्स को भी दे दूंगा. मैंने सर ब्रांच के इस पे डाल दिया और सारे मेंबर्स को मिल जाएंगे.
डालिए सर. और मैं वो जो मेंबर का जो क्वेरी था ना सर, फॉर्म वाला, उसके ऊपर डेफिनेटली काम करूंगा.
यस
वो मैं भी आई एम फेसिंग द सेम प्रॉब्लम, एंड वी विल ट्राई टू फाइंड अ वे आउट. वी विल ट्राई टू श्योर. प्रैक्टिकल डिफिकल्टी है, वो बहुत बड़ी डिफिकल्टी है, बट वी विल श्योरली फाइंड अ वे आउट.
सर वो नोट डाउन कर लिया आपने नंबर?
जी मेरे को नंबर वो उनका नंबर मिल जाएगा मेंबर का, तो आई विल इंटरेक्ट विद हिम.
एक मिनट. कौन सर?
यस सर.
कौन है वो मेंबर, देखिए ना.
यस सर, मैं फॉरवर्ड कर देता हूं.
सत्यनारायण जी मनिया.
यस.
तो मैं डेफिनेटली
सर आपको डाल दे रहा हूँ सर. उनका
चलेगा. तो क्या होगा ना कि वो उस पर कलेक्टिवली काम करेंगे तो हो जाएगा.
यस सर. बहुत बढ़िया, इफेक्टिव रहा सर.
थैंक यू सो मच.